Welcome to Analysis in Chains with Nathan and Neal. Happy Monday, everyone. Welcome to episode 17 of Analysis in Chains on this Monday in September. It's a beautiful day outside. Neal, how are you doing today?
I'm doing fantastic. All is good over here in Montreal.
Ah, wonderful. It's a beautiful day in Berlin. Today we are going to just be talking, we're trying to get back to some basics here, going to talk about some developments in the blockchain world, things that have happened. First, Neal, did we get any emails from last week? Any responses to our amazing bot name?
Yeah, so we got an interesting response from a guy called Jodin Ravaya, and the title of his email was bot name, so I was very excited. Thinking, okay, which one did he choose? So he just wrote nutmeg. I was like, okay, that's interesting. Then he wrote thank you, followed by sorry. I wasn't so sure if he was sorry for his idea, or I wasn't so sure what he was sorry for, or what he was thankful for. So
I think nutmeg was possibly the name of the bot, or maybe sorry was the name of the bot.
Yeah. Yeah. It's like he signed off as sorry.
Oh, maybe.
Yeah.
Anyway, well, you know what? I appreciate that. I'm willing to rename the bot Nutmeg, and thank you for writing in. And if we're poking fun at you, it's because we love you, not because we hate you. So if you send us your, did we get a Waves wallet address? We can send him some nutshells.
No, he didn't send Waves.
All right, so
so
if we can write him back, and if he wants to send us his Waves wallet, we can give him some Nathan and Neal. What? Nathan and Neal nutshells. They're the Analysis in Chains nutshells. Today, I actually went out to a European Space Agency event, and it was very cool because, as you know, I'm working on a project, continuing on my project for tracking conflict-free minerals and using blockchain. And one of the issues that we run into is that we foresee is collecting data in rural areas because, you know, blockchain requires a lot of computing power. And I've actually met someone from the space agency who is working on a project to run blockchain on satellites, so that when they pass over a couple of times a day, then you'd be able to connect directly with a blockchain system that was in orbit. So I thought that was absolutely fascinating. So I asked if they'd come on the show, and so we're going to hopefully have those guys on in a future show.
Awesome! Like I love the idea of satellites, you know, working with the blockchain and communicating and stuff like this. It goes to show, you know, the potential of the technology. And it's still early days. You know, we often hear the comment that we're in 1994 or 1992 in terms of development, you know, when we compare it to the internet. But it's like, you know, I feel like more and more people are embracing it. And I think in 10, 15 years' time, the world could be very, very different.
Well, I mean, you know, even with something like payments, like there are a lot of startups out there, and some of them have raised quite a bit of money, like in order to do banking in rural parts of the world where they don't have the same type of bank connectivity. And so, I mean, this is an issue of how do you get people in those areas to be able to communicate with a blockchain-based system. And something like a satellite would be very interesting running the sort of system. So yeah, I could see potential with that.
Yeah, me too.
So Bitcoin prices, man.
Yeah. I guess I think that the less said of Bitcoin price, the better, because it could really date our show. You know, as soon as we upload it, yeah, it could be out of date instantly. So
didn't that happen last week? Like, we had a whole thing on Bitcoin dropping, and by the time it actually uploaded, we got a 10% rise or something like that.
Yeah, it was like, you know, we probably should have started all over again after that happened. But yeah, it's like, you know, just based on research and all the analysis that's out there, yeah, you know, we are probably at an inflection point that it could really go on another tear, you know, again, or it could really, really crash. But I feel like you could say that every single day about Bitcoin. But I would say these days are a lot more fascinating than what we've seen already to date since we started this podcast. So we'll have to wait and see. Like we could be digging into it a bit more this time next week, or we could just be like, look, it's fluctuating again. It's climbing. Yeah, whatever. The world is round. The sky is blue. So we'll see.
World's round, sky is blue. Bitcoin price is completely unpredictable.
Yeah.
I don't know. I've got exactly 3 Satoshis, so I'm not exactly heavily invested. But I'm wondering if now I should just say, I got to have a hand in the game. Put a little bit of money in there and just see what happens. Either you lose it all, or it goes to the moon, and you go, hey, look, I got to participate.
Yeah, and I think that's what's happening a lot of the time, because I think like 65% of all volume now in Bitcoin is from Japan and USA. And, a lot of people just want to have some skin in the game. And that in itself creates a good sort of support line, for Bitcoin. And, it could mean it could stay, its lowest could be 3,600 because so many people just want some skin in the game, for example. And, and it helps it grow over time because everyone's doing that. But long term, will everyone want to do that? Will everyone be like, oh, it's going up, or maybe I just throw in $100 here or whatever? And that type of activity could be all is required to help Bitcoin grow. We'll see. I think a lot of people have the same mindset as you right now.
Well, what's funny about that is that it makes it kind of a mixed blessing for us, right? Like here we are with an analysis in chains, looking at the different factors. And you can analyze big factors like China doing a ban, or large groups of people in Japan buying up Bitcoin, or South Korea doing like this massive ICO push, or all of these mega factors. But when you get down to large scale small factors, so like what people en masse will be doing in a crowd, that makes it really hard, because this is not a traditional investment vehicle. This is not something where you've got institutional investors with sort of predictable algorithmic buying and selling going on. At least not to the scale that you would have in, for example, a stock market. And so you have these groups of people who are just going to hodl, to hold up onto their coin no matter what, because they're convinced it's going to go up. There's other people that are going to sell and then try and move out and day trade. And beat the market. You've got other people that are like, well, there's got to be a floor, and they're going to buy with no other basis other than their feeling. And That's much harder to predict and analyze.
Exactly. Like all we can do is analyze the technology and look at institutional adoption. I think that's the main thing people need to look at, because if we see more merchants using Bitcoin and other cryptocurrencies, it's because has real business potential to help grow commerce in various parts of the world. I think they're the things we need to be watching. And, we like to look at the technology developments because that helps with the case for adoption. The whole speculative part, it's so hard because it's so hard to speculate on things that have so little data to back it up. And then I think the more institutions that do get involved, and the more data we will have, and the better we can judge the price of the various cryptocurrencies. So yeah, it's an interesting space, and it could be a few more years before things settle down. But I really feel that it's all about merchants. It's all about people having a reason to spend cryptocurrency. I think is the most important thing that's out there.
Mm-hmm. Well, speaking of, I don't know if you've been reading up on the news, but I like every so often just to scan the headlines and see what sort of developments in that vein are going on. And there's a blockchain startup that partnered with Mastercard just recently to launch a digital money account So, speaking of the big guys getting in, did you hear about this?
No, please continue. This is fascinating.
Well, it's just it's a startup called Stack, and I didn't look too deeply into it because that was interesting. But what was more interesting was that it was Mastercard, and it's actually based in Canada, and they have a beta app. They've got about 20,000 people registered for the beta app, and it'll begin onboarding users. But basically, it's a financial services fee-free alternative to traditional banking.
Oh, wow.
So they're using like blockchain tokens to do personal finance, and includes a chip and pin Mastercard prepaid card, and so they're basically trying to. I guess it looks like Mastercard is trying to get in on crypto by incorporating the technology into into traditional banking, where more people would be used to interfacing with it.
Yeah, I find it so fascinating, these type of developments, because if you think of some companies around the world, like say you're based in Europe and most of your transactions are with people within the EU, for example. But if you're from Argentina, or Venezuela, or New Zealand, or different parts of the world, some of these companies could be out of reach because of how you pay for services. Whereas if you were to use something like this Mastercard type of blockchain or crypto, it could open up so much economic potential. And this is what is so revolutionary about cryptocurrencies, is its ability to unlock economic potential that is out there when it comes to buying and trading. So yeah, this is it's an exciting piece of news, and I can't wait to see where it goes.
I'm not sure where Stack is. I think Stack is based out of Toronto, if memory serves. Anyway, if any of our listeners know anyone at Stack who want to give us more information or comment, I only know what I read in this little article here, but you can write in at info@analysisandchains.com. Let us know what you guys think of it. I don't know, Neil. For me, when I see this sort of partnership happening, I think it is inevitable that the big companies get in, even though, on the one hand, blockchain does and cryptocurrency does threaten the business models of these big credit cards and banking institutions and settlement services. On the other hand, it's not something they can ignore, and it's probably for the best that for their business model that they get into it. But I almost wonder if they can offer something that legitimately disrupts their own business model, or if they're just going to be using blockchain to say they're using blockchain, and it actually acts like traditional banking.
Yeah, I think you just made an amazing point there, because they are potentially hedging their bets. It's not too dissimilar to a lot of the car companies working in collaboration with Lyft and Uber. It's like, okay, could this really disrupt our industry? And is it risky not to be involved in the development of self-driving cars? Like, to be ignorant of the technology, could put the whole company at risk. So they may not believe in the technology, but it is in their interest and in the interest of their shareholders to be involved somewhat, to be ready for 10 to 15 years down the line. And this could be the case for a lot of these current institutions or current financial institutions. They may not be 100% on board with blockchain, but they have to show some form of interest to keep shareholders happy and just to be ready for what's coming in the horizon. But the thing is, when we look back on the internet as an example, many people saw the internet as a great opportunity for many, say, institutions at the time to expand their business. Like if we think of Walmart, for example, like the internet was a great opportunity for Walmart to grow its business. But we end up seeing now that Amazon is the key retail player, and a lot of the top companies now involved in a lot of the top companies involved in the internet today are internet type companies, as opposed to say GE or Walmart or Sony, for example, they're not dominating the internet. It's like Google, it's Facebook, it's Amazon, it's Netflix. So the thing about blockchain is that we could still see the same thing happen again. We could see these institutions be very interested in blockchain, like we saw how Walmart was interested in the internet when it first came around, but they may not be quick enough to adapt. They may not be innovative enough because of their corporate structure. And so we could really see new financial services blossom, out of thin air and become the leading financial services of the future.
You bring up a very important point, and it's interesting because no one really knows. But that's why they're probably racing to try and adopt this. They don't want to miss out. But this brings me back to a prediction I made a while ago, and I still hold by this prediction: is that we are going to be dominated by the older players. That's my guess. And it's not because I want that to happen. It's because I guess when I think about how people interact with blockchain and cryptocurrency and Bitcoin, there is a core of people in all of these communities that understands the technology and the different technologies behind them. But a lot of people don't really understand it. They just want to treat it as tokens, and all tokens are equal. And they just know that I get tokens, I give tokens from wallet, I get goods and services. And as long as that's going on, it means that if a large company or a government makes their own crypto token, then it's just going to be treated as equal, and they've got a lot more marketing power behind them. So I don't know. It doesn't necessarily have to go that way, but I think there's an enormous potential for the existing institutions who are already just sort of like alarm bells going off, like we're in danger of losing our business or our power over the market or whatever, to come in and actually dominate the space.
Yeah, I think it really boils down to, can blockchain companies offer something different? Because you're right, if they're just a transactional service in the financial space, well, then they're no different to Square, PayPal, Stripe that are already out there. And those companies could come in and buy up some blockchain startups and then dominate that space. That's one thing that could actually happen. So a lot of these blockchain companies have to be a little bit more innovative. They have to offer something that isn't already out there. Like if we think of Amazon, for example, if you were to buy on Amazon when it first started, you could see people's ratings on products, and that would make you want to buy certain products. Like Walmart didn't have something like that. You just went and looked at a few shelves and made your own personal judgments based on branding. You didn't have that feedback loop, and that was an innovative part of Amazon. So a lot of these blockchain companies so far don't have anything innovative. So because the thing is that they're just transacting, and some people see cryptocurrency as a potential store of value, and they buy Bitcoin and they see it growing as an investment. But there may have to be some other tools out there to make these blockchain companies become big financial players, like in terms of lending, for example. We see some peer-to-peer lending companies out there, but maybe if they were to grow because of how they work, maybe they could end up really rivaling the likes of JP Morgan, Goldman Sachs, and the likes, just the same way Amazon rivaled Walmart, for example.
When you say you don't see anything innovative, I mean, there's plenty that's innovative out there.
Oh yeah, sorry. What I mean as a financial tool. Sorry, in terms of the tech is very innovative, but I mean coming up with a financial instrument is. Yeah,
that's what I figured. Sorry. I mean, I think that's basically saying very similar to what I said, which is that the people don't see that.
Yes, exactly.
There will be a core that does, and that really believes in the difference that's going on. But if the average person doesn't experience the innovation, or if they don't recognize it, then there's an upward hill to walk up in terms of marketing.
Exactly. No, I totally agree. I think it's going to be very interesting to see if new financial instruments come out of blockchain, and if they don't, well then, going back to your earlier point, the big players could just end up dominating the crypto and blockchain space in the future.
I mean, we are speaking about this from a very, Western-centric mindset as well, like, because that's our life, right? But like when we had Radoslav on a few weeks ago talking about Bitbond, his main markets are like all around the world, like small businesses selling on Amazon that just need inventory lending, and people invest or lend their Bitcoins out to them, and it allows lending in places where it might be harder to get banking or small business loans. And so, maybe a lot of the dominance will end up happening in the Western world, whereas the innovative companies will end up going into markets that don't have the dominance yet.
Yeah, well, that's one of the main arguments made about blockchain, is that it should target emerging economies first in terms of offering financial services. Like Bitbond, for example. So, yeah, you're right. We could see two different worlds emerge. You could see the Western world, life goes on. We use blockchain technology in the background, but you still transact like you've always have had. Whereas in the emerging world, they could, see things differently. They could do things a whole lot differently because it's harder for them to have a bank account, and their wallet could end up being their bank account. And because smartphones are widely available in a lot of these emerging economies, and people's lives are on a smartphone. They don't have a computer. They don't have banks. They could really revolutionize things over there, and then the West may conform to this type of innovation. So, this is what I think this is what a lot of people feel could play out, but we'll see. Like, we're still in early days, still very speculative. But again, as I've always said, this is what makes blockchain so exciting in terms of technology.
I sometimes wonder if we did a word map of our podcast, how many times the word early days would spring up. One more thing just on the same topic is the idea of passing borders. I think in the West, we sort of take for granted the ability to do business across borders between Canada, US, Europe, European nations. But it might be more difficult going into places like Asia unless you have like especially if you're starting from Central Asia or Central Africa or something, starting your business and selling overseas could be much more difficult, and that would be where something like a blockchain that doesn't really rely on borders could help leapfrog.
Exactly, because think of how many countries out there, their economy is held back because of poor financial institutions that no one trusts. Be it people putting their money under mattresses because they feel that's the safest place to keep their money. And then in some case, you have countries where they have hyperinflation. Their governments are just printing money to get out of their debts. So it's like these are the main cases and main reasons why people feel blockchain and cryptocurrencies have so much potential. And I know a lot of effort is going into these emerging economies to help them realize the benefits, but it's still an uphill climb, because you're coming into these countries and tell them, hey, we have this amazing technology, and like, well, why should they believe you? It's like it's going to take time to help them become more aware of this opportunity, and I hope they embrace it because the potential is enormous.
That's very true. Okay, let's wrap up today's show. Before we go, I wanted to mention that this Friday we are going to do another coin in-depth look, and so I'll be going on the forums in Reddit and asking, and we're looking at IOTA. So IOTA, that's definitely a different type of coin, and Neal and I have already had talks about that, and what to trust, what not to trust. So what do you think, Neal? You think it's going to be fun?
Yeah, I think it's going to be interesting. Our views are quite different on it already, but I'm going to keep digging because there are so many people excited about it. So I kind of question myself. It's like, why am I not that excited? But the thing is that it is quite new. So when it is new, the material out there to understand it is more limited than, say, Bitcoin, which has been around for years. So I'll keep digging, and we'll see if I can get as enthusiastic as you.
Oh, I drank the Kool-Aid. So, all right, and then the week after, so the 29th, we're going to have that interview with Sergey Nazarov of Smart Contract. So be sure to tune in for that. And we're going to post an upcoming schedule soon on our website, so you'll be able to see. And we've got another interview coming up maybe the week after that, don't we, Neil? With didn't you do an interview?
Yes, with Aglos from IOHK. So
IOHK.
He looked at his proof of stake. Proof of stake. What would I call it? I guess theory. Is that the right word? I don't know if I'm using the right word there. But he has a peer-reviewed paper on a version of proof of stake, and it's been used by Cardano, I believe is the coin. So we've a good interview on that. It goes into depth into his theory and the potential of proof of stake for the cryptocurrency world.
All right, so we got a lot of stuff coming up for you guys. All right, Neil, prediction time. I don't know what to ask you.
Yeah, it's hard. Like, I think we've done a lot of predicting already in terms of financial services, in terms of how it could evolve, and a lot of it is, we're seeing so much amazing adoption of blockchain in all sort of institutions and industries. I don't have any more predictions left. I think we've. Because Bitcoin prices are so ridiculous and in terms of volatilities that I'd rather skip this one for the sake of
I got a prediction for you. I think we're gonna now that friggin' I don't know, Mastercard is out there with their own partnership. I think the next thing we're gonna see in the news is Visa. I think.
Oh, okay. Okay, that's a good one. That's a good
I think it's going to be not too long, like a couple weeks before we see them in the news. I haven't seen anything yet. I don't know if I missed it. Like, did you see anything Visa doing blockchain?
But the thing is, people use Visa to transact cryptocurrencies, but more, it's almost like a fake Visa, or if you want to call it that. It's like you can create an artificial Visa card that is a Visa type of card, like a debit card, prepaid Visa card. Yeah, so we see prepaid Visa cards used for crypto transactions, but in terms of getting into blockchain space like Mastercard, I think that's a good prediction. And then we can see American Express and other companies like them get into it as well.
All right. Well, if you know, if anyone out there knows of any major credit card other than Mastercard that's doing something like that, write us in info@analysisinchains.com. Let us know, and that's it. All right. Talk to you guys on Friday. That's our show. Thanks for tuning in to Analysis in Chains with Nathan and Neil. Check us out at analysisinchains.com, on iTunes, Podbean, and wherever else you listen to podcasts. Until next time, keep hashing.